All right, what's going on, everybody? Welcome to another back testing session. And I'm going to kind of actually go into exactly how I'm going to actually trade each New York session. So when I really look on my rules, the very first thing I like to do is always check the news. So basically what I do is log in. And of course, this is the weekend, so we're not going to really have that much news. Of course, they're saying the JPY is going to be under some major news, but we're not doing that. But let's say, the news was saying, hey, the USD is going to be under some major news at 10 o'clock or maybe 9:30 or whatever the case may be. I'll keep a note of that. And then what I'll do is I'll go back to trading view, and then I'm going to actually click on my first pair, which is the AU pair, the Australian dollar versus the US dollar. And that's when I open up the chart. Now, the first thing I want to do is actually pretty much look through all of my pairs to see which one has the best setup. My goal is to actually get into a pair that is already trending. Now, if I look at all my pairs and I see that all pairs are consolidating, then I'm probably going to be looking at gold, see if that has a good setup. But typically, I'm going to be looking for a nice setup. I don't mind trading consolidation if I have to, but I would rather trade a pair that's already trending, because then it lets me know that more likely price is going to continue in that direction. So perfect example is I would say, let's look at GU. Let's say I look at GU and I see that price is actually trending downward, right? So let's say I'm at this point, right? So here, even though price is consolidating, right? But price is still trending down because price took a big drop to the downside and now is actually respecting this zone area here. So something really, it tells me at this point that price is probably going to continue to trend down and maybe fill this balance. So if I see this at the 15-minute, that's when I'm going to actually start marking up the 15-minute time, from the 15-minute time frame to the 4-hour. So that's what I'm going to actually do now. I'm going to go all the way back in price until price is no more recorded. So let me go back, be right back. All right, so we see this is as far back as price will go. So we'll put a vertical line here. All right. And so now what we're going to do is mark up institutional support or resistance. And these are areas where in the past price has gathered a lot of liquidity and made big moves. And these are the type of moves that you want to be in, consistent moves like that. I would say this is probably a good spot here. Next spot I see is here. Maybe bring it up to here. And maybe bring it up to here. We can kind of see, prices hitting a lot of liquidity and dropping hard here. And then I see a good one here. And then I'll probably put another one up here. And then, of course, I'm going to draw my zones under these as well. And so the reason why I draw zones on these areas is because we get more of an idea of times when the institutions are gathering liquidity. We call it liquidity grab. They're grabbing liquidity grabs off of these areas and then make big moves. So now you get an idea of what more likely price is going to do moving forward. So now we're going to move on to the 30-minute time frame. We're going to repeat the process. So this is as far back as we went here. So now we're going to do that here. And so now we're going to put another one here. We're going to make this green. The green is going to represent the 30-minute time frame market structure. All right. So then we see one here, here, probably gonna put it right here. Probably put another one down here and then down here. And then what we're going to do is just draw zones on these. Because now you're going to get an idea of what price is doing. So that way you can get an idea of what trend price is at when you are trying to make your entries. That's the key. So now we're going to go to the 1 minute time frame, 1 hour rather. So this is where the last horizontal line is at. So then we're going to put another one here, and more than likely this is going to probably be right there. Price rejected this area and went down to the next zone. Say the next zone is down in here. You know, just basic market structure. This is what you want. And we're going to draw our zones on these. See, price respected that area and dropped down. See that right here as well, drop down. And so you kind of see it. Price is grabbing all this liquidity grab up here, dropping down to this next zone. These are the type of. All right, guys, sorry about that. My computer went out on me. So as I was saying before, so we're marking up these areas, key areas where the institutions are doing liquidity grabs. And these are areas where they're gathering liquidity off of everybody's stop losses and then making a move to the next zone. So we can kind of see that price kind of went down to here. This is the next zone here. See what happened. I got to actually go back and activate my replay tool. Let me pause this recording. I believe I'm in the right spot. So now we have actually marked up everything on the 1 hour. Let me kind of go back a little bit. Yeah, this is the 1 hour. Okay, so now we're going to move on to the 4 hour. As we can see, everything is marked up on the 4 hour. And on the 4 hour, you can see there's already forming a bearish engulfing candle. So that lets us know that price is trending downward. It's a perfect setup. So at the 4 hour, what we typically do is make sure that we mark up all of the zones close to each other. So now when we go back to the 15-minute time frame, we can clearly see that price is interacting with this zone. So if you see that price did a lot of liquidity grab and dropped down to here and then basically went up to here and retest that same area, it dropped again. So what do you think is going to probably happen? It's probably going to retest a zone up here and then drop. So then once we completed step one, then step two is to identify the trend. Well, when I really look at current price, I can see that price did a downside to here. So we see that there's a lower low, lower high, so on and so forth. So I would say that price is trending downward. Okay. Now, of course, I would make a note and say that price is overall bearish rather. Right. That's what I'll be looking for. Then the very next thing that I'll be doing is looking for the most recent high. The most recent high, which I would probably see here, and the most recent low that I would see here. So in order for me to really see if price is really going to go bullish, I would want to see price. Matter of fact, let me remove this. I will move the zone up to here. Probably like maybe up to here. Matter of fact, let me make this smaller. I would make this smaller and just put like up to here. And price is obviously hitting the zone up to here. So then I would be looking for price to actually, if it breaks this high here, I would say we'll go bullish for another, 20 pips, definitely up there. So if it hit down up to this point here, then, I'll be trying to get at least 20 pips, but I'll probably move it up just a little bit more just in case the price go that direction. So this will be my break and retest line for the buy. Point blank period. And then to sell, I would be looking for price to cross this area. And that's what I'll be doing for the sell. And that's what I'll be looking for. And then once I do that, of course, I would turn on my higher high and lower low strategy indicator off. Then that's when I would turn on my institutional indicator. Before I do that, let me do this. There we go. So now this is where I would be looking for, zones of mitigation areas. So I would see this is a possible zone here. So if price broke this line and this mitigation zone, then I would be looking for it to go at least to this zone here. Maybe even this zone here. So if price bought up, I would be looking for it to go all the way up to here. That would be 20 pips. So this would be a mitigation zone. So I probably could have just honestly bought the zone down to here, which is fine. Then as far as selling, I would be looking for price to at least come down maybe to this zone or this zone. So I'll probably be drawing a zone here and then be looking to get 20 pips, 10 to 20 pips down to here, which really this would be 36 pips. So that's what I'll be looking for. And of course, I'll be putting my risk to reward tools in place. So if price sold, I would want to get at least a risk to reward of 1, probably put my stop loss up to here. We're talking about first take profit here. Second take profit down to here. And that's what I would be doing for the sell. Now, that's what I would be looking for. Now, if price buys up, then this would be the break and retest line. And I'll be looking to get 25 pips from this. So this would be take profit 1. Minimum 10 pips, maybe 12. So I'll be looking to get at least up to here. Then my stop loss will probably come up to here. And that's what I'll be looking for. And then, of course, you know, I would use my Delorean EMA indicator. And as you can see, of course, price is above the 50 EMA. But like I mentioned before, price will have to break all the way up here for me to do a decent buy. That's what I would be looking for. So I would still be looking for that cross, because previously price respected this area. And this is really a mitigation zone here. They grab liquidity up to here. It's probably going to drop down to here. But if it does buy up, I need to wait for it to go up to here for it to be confirmed, because price could come up and mitigate against these zones here and then drop. So that's why I'm putting my break and retest here. If it breaks all of this and this, then they have enough power to buy up to that point. So now what we're going to do is just play the replay and see what price does. So then I'm going to kind of talk about how we get into my entry. So now when we look at this here, this would be well, this happened at 1:45. So this is in the afternoon. So we'll act like this is the 9:30 bell, whatever the case may be. So see price pushing down. Let me see. You see another one. So price is consolidating a little bit. So I would be sitting down. And now look, you got a very strong bearish candle here. Now, usually I will wait for the next candle to close below. But if this candle had kept on pushing and pushing to this point, then I probably would have entered in maybe here, because I would have saw enough momentum. So then at this point, you know, you're talking about 9 pips. And, you know, with 9 pips, let me bring up the calculator. $42.20, you times that by 9 pips. I mean, you'll get 350 plus profit. So you might be able to get away with that. A better entry would be better, but that candle was gaining a lot of momentum. So this is a master candle. So a master candle never fails. More likely you'll get some pips from that. But we could have waited for the next entry, and it's going down to here. And that would have definitely gave us our pips, because if we had got in from down here all the way down to this wick, that would have gave us 11 pips. We would have definitely made our money. So this would have been a good entry. Now, and then of course, you know, prices, you know, pulled back a little bit, and then it really dropped here. And it hit this mitigation zone. And then now is respecting this mitigation zone. So we would have been out this trade. But just imagine, worst case scenario, we would have just gotten in the middle of this here and probably got about 8 pips, which still would have gave us our money. Best case scenario is we would have probably closed the first partial trade, let it ride down to here, and then let it pull back and then ride all the way down to here. We would have made, you know, a killing on the second partial trade, letting it run. But this is just another example on how to win the trade. But the reason why we won this trade is because we looked for a good setup from the beginning, and then marked up proper market structure and just used our confluences along with our institutional indicator and our EMA indicator. So this was a perfect example. Now, let's do a little something, one more thing here. So now, let's say we go to, let's just go to AU, okay? Let's say we're on a 15-minute time frame. We see kind of a good setup here. So let's say we look, let's just say right here. Now this right here, this probably will look like an uptrend, really. So let me look at a better example. Something like this. So this is a good example because price is starting to trend downward. You can kind of see that. So this would be a good example. So then what you want to do is when you go to your 4 hour, you want to make sure you mark up market structure as closely as you can. So you see some good market structure here. You see it here. And then you also see it up here. And then up here. And then what we're going to do is we're going to draw zones on these. This is how we can find a good sniper entry on the 15-minute because we marked up our market structure as clean as possible. All right. And then we're going to go to the 15-minute. See what I'm saying? So now you marked up some clean market structure. So now you have an idea of what price is doing. Price did a huge liquidity grab on this zone up to here. It went down ever since to this next zone. And then it kind of came up. So then it kind of gives you an idea that price is probably what? Overall bearish. You can kind of see it on the RSI here. So then you would draw a trend line and put it up to here. Then the very next thing that you would do is we identify the trend, which is step 2. And that's when we locate the most recent high, the most recent low. So then in this case, if we want price to let us know that it's starting to turn bullish, it's going to cross this line here, this most recent high here. And then if it's going to continue to go bearish, then you would try to look for the most recent low, which could be here, possibly even here. This may even be more safer, right? So now you figured that out. So now, give me 1 second. Okay, I'm back. So in that situation, you get an idea of more likely what zones that price is respecting, right? You kind of see a zone up in here. So now in this situation, we figure out a break and retest line so we can get our sniper entry. Now we're going to actually say to ourselves, okay, according to the institutional indicator, what imbalance gaps do we see? Now, we see that price respected this area. So if price was to cross, break and retest this, then I'll probably be looking for price to go up to this zone and then stop, or maybe respect this area. But if it crosses here and it busts through this, then it's going to sell at least to this next point. And that's what I'll be looking for. So then I would kind of bring my zone. Well, I probably will leave my zone here. So I'll be looking for price to go down to this next zone here or up to this next to this zone here. So then when I identify my break and retest, that's what I'll be looking for. Now, then what I would do is plan my trade. So if it's going to sell, put my stop loss here. And I would be looking for at least 20 pips. And this is going to really be, you know, the second take profit. First take profit is at least 12 pips. And that's what I'll be looking for. And then for a buy, you know, I'll be looking for at least 10 to 20 pips as well. 10 pips up to here. And then if it passes even this mitigation zone, then I'll be expecting to go all the way up to here, which would be insane, but you know, that's what I'll be looking for. So now, once I do that, turn on the Delorean EMA, You can see that price is above the 50, but it's a little bit between. So the question is, which way would it go? But I would say that price is overall bearish, so I would kind of be more looking more for the sell. So now let's go ahead and play the replay tool and see what it does. So it's respecting that area. It's kind of, you know, it pushed up, but then started to push down. A lot of consolidation. And now you start to see it coming down. Right? So now, so as you can see, next candle closed below, but it's still respecting this area. Not a good entry, right? Okay, now this probably would be a risky entry because price could retrace and go all the way back in. So in this case, I would wait for the next candle to close below. So then next candle closes below, but it doesn't gain any momentum. So I would have to wait for this candle to start gaining momentum and pass this wick. Then I would get in. And look, perfect entry here. It came down. So let's see how many pips we would have got from that. So, I mean, if we would have got in here and went all the way down to here, okay, about 4 pips, decent pullback. Price has to pull back. So if we realistically, if we had got in decently into here and went all the way down to here, that probably would have gave us about 6 pips. And if your leverage, let's see, if our lot size was $42.20 a pip, time that by 6, $253 profit. So we probably would have made it right there. But then price pulled back. And then now it kind of pushed up against this area and rejected it. And then just rejecting that area again. And then finally it dropped some more. And now it dropped heavily here. So this probably would have been the ideal entry because now price gained momentum and now that's another 6 pips. But then it dropped even more. See? And then it really dropped at that point. So sometimes you got to deal with these pullbacks, but price really dropped at that point. So from here all the way down to here, went down to the next zone, 13 pips. So it just goes to show when you mark up good market structure and you see what price is doing against these institutional support resistance, you'll see areas where institutions are grabbing liquidity. We call it liquidity grab and making big moves. So that's it for this back testing session. We will do more of it as time goes on. But yeah, that's how I actually get entries in the market. So definitely review this, guys. I know I will. So that way this can help you to trade better. See you guys later.